In today's video, I'm going to be discussing May 1st and the all-important Federal Reserve announcement and what it means for you and your money over the coming days, weeks, and months. That's the focus of this video. Let's get into it and talk through all the details. All right, now in just a short amount of time, the Federal Reserve will be coming forward on Wednesday afternoon at 2 p.m. East Coast time with their interest rate announcement and letting us know what they're going to be doing with interest rates because they've been very high over the last couple years. Now that comes out 2 p.m. on Wednesday, and shortly thereafter, about 30 minutes later, the chairman of the Federal Reserve, Jerome Powell, will also be coming out with his press conference and answering those really tough questions and tiptoeing around all of the answers so we can all see what is going on here and the decisions they made with their two-day meeting. Now remember, they start their meetings on Tuesdays and they wrap them up on Wednesdays, and that's when we get that all-important announcement. Now here's the thing. These are very important and very influential announcements as well, because over the last, call it year and a half, almost 2 years now, the Federal Reserve has been aggressively raising interest rates to bring down this inflation. Now, has it worked? It depends on who you ask, right? Because here's the thing. We see all these inflation reports, okay? So in the middle of the month is when we get the inflation reports that come out for the previous month. We've seen inflation coming down as far as the headline number over the last, call it year and a half or so, since it topped out at 9.1% in June of 2022. We've seen this headline number on inflation coming down. However, it's kind of interesting because maybe prices are not rising as rapidly as they once were a couple years ago, but the situation is prices are still very elevated right now. Now, even though prices have not been going up as a result of rapidly rising inflation, we're still seeing that, wait, we still don't have any money and we're still paying out just as much. How so? Well, here's the thing. Nobody has any money right now, so a lot of people are floating balances on credit cards with a very high interest rate, again, that has been jacked up over the last couple of years here because the Federal Reserve has raised interest rates, and as a result, okay, fine. Maybe we're not going to the store and paying an extra $1 or $2 or $1.50 or whatever it happens to be for literally everything in our cart, but yet we're paying just as much out of pocket on interest on balances that we're floating on credit cards. So at the end of the day, net, we're basically coming out of pocket just as much or even more today than what we were over the last couple of years here because, fine, maybe it's not on the goods and services, raising prices and things like that, but it's because of the high interest rates on balances that we're floating because nobody has any money. So at the end of the day, we're still coming out of pocket just as much as we have been over the last couple of years, and realistically, even more as of now. But anyway, I apologize there. I digress a little bit, but again, you get the situation here. Now, this is very important because it all comes down to the Federal Reserve and their announcements. Now, here's the thing. Once every 6 weeks, they come together and they have this announcement, or they have this little meeting, okay? They have this 2-day FOMC meeting. It happens once every 6 weeks. The next one is actually on June 12th, okay? So it's about, what is that? Yeah, 6 weeks out. Well, obviously, right? So it's in the middle of next month. But when we get this next announcement, this is also going to be very important because here's the thing. They've been holding interest rates very, very high here. And there's all this talk saying, oh, they're going to continue pausing. They're maybe going to raise a little bit more based on this inflation data, or maybe they'll start cutting rates at some point. Nobody really knows, right? So that is why this announcement is so incredibly important, because this has a very big influence on a lot of different factors, right? So the housing market has really dried up a lot over the last couple of years as well, because interest rates have gone up so much. A lot of people are not able to afford the houses that they once could a couple of years ago because interest rates are so much higher, making those payments significantly more as well, right? So anyway, there's a ton of factors. And again, the interest rate policy translates literally into everything. So if you're borrowing any money right now, like I said, you're floating a balance on a credit card, you're opening up a new loan on an auto loan, a mortgage, a student loan, literally doesn't matter. It's all pegged to what the Federal Reserve is doing to some degree, okay? So this is all very important. So we'll have to continue watching what happens here. But a couple of things I want to point out for you really quickly. There's all this talk out there. There's been this chatter that, oh, they're gonna start cutting rates. They're going to have up to 6 cuts this year. I don't know about that, okay? I highly doubt we're going to see 6 interest rate cuts this year unless we say things happen really, really fast and really, really bad in the second half of this year. But even then, there's not going to be 6 meetings. But my point is, if we start to see them cutting interest rates aggressively, does that mean like, oh, hooray, it's all good and we're in the clear now, we're all good to go here going forward? That is not what I would suggest, okay? Here's the thing. If they start aggressively cutting interest rates, I would say that as a little bit of a warning sign. Why? Let's look at the big picture here. Why would they cut interest rates? Remember, They raised interest rates to bring inflation down. This has been contracting on the economy because people like you and me, businesses, small, medium, large, basically everybody out there is cutting back on spending and borrowing money because it's very, very expensive to borrow money when it's, say, 6, 6.5, 7, 7.5, 8+% right now of what it is now versus what it was a couple years ago when we were seeing interest rates down at, say, 2, 2.5, 3, 3.5, maybe on the high side. Interest rates are significantly higher today. So it's way more expensive to borrow money now. Okay, so if that's the case, we're borrowing way less, we're spending less, and we're stimulating the economy less, okay? All of this is taking a big impact onto the economy, okay? The impact, or the economy is contracting as a result, okay? So think all of it this way, okay? So if they cut interest rates, this is basically just their signal of saying, hey, we're starting to see softness in the economy. We're not really liking how much the economy is contracting and how soft the economy is getting. We're going to start cutting interest rates to do what? There you go. Spur spending, spur borrowing, and things like this. And then when interest rates come down a little bit, it makes it a little bit easier for people to borrow money, makes it a little bit easier for us to maybe, stomach the idea of, hey, I need to borrow some money to stimulate my business or whatever people are thinking, right? So then start doing this, and then there you go, stimulates the economy yet again, without overheating and causing more inflation. Does that kind of make sense? So even though a lot of people are suggesting that, interest rate cuts would be great for the economy right now, well, depends how you look at it, okay? It depends, because if we start to see the economy contracting more than we're already seeing now, then yeah, they will likely cut, and they're likely going to cut rates very aggressively at some point, maybe, depending on the severity of the actual contraction in the economy. We'll have to see what happens, but this is all kind of factors that we're looking at, okay? And remember, a lot of this will also cause a lot of volatility in the markets as well, okay? So if you're potentially watching the stock market, the crypto market, the bond market, things like this, if you're watching any of these or actively participating, just be prepared that generally on Fed Day is what they call it, Wednesday, the days that we get the FOMC announcements, we generally get a lot of volatility. Maybe not so much on the announcement of interest rates, but rather when we get that press conference from the chairman of the Federal Reserve, Jerome Powell, that is when the volatility usually starts happening and whipsawing the market all around because it's based on his comments, right? As far as what the Federal Reserve is likely going to do with interest rates, that's usually baked in. A lot of people already have a pretty good idea of what they're likely going to do, and that really doesn't cause that much of a reaction in the market, but it's usually the comments out of the chairman. That's where things get a little bit dicey, okay? So anyway, this is what I want to bring to your attention really quickly here. Again, I know still a little bit of time here, but this is what we need to be prepared for, and again, it all is based on the economy. Remember, it's always economic based, right? That's what we always wonder too, is like, are they going to do anything for us? Well, it's all based on the economy. Watch the economy. If the economy goes down, guess what? We get lifted up, right? So it's kind of like a inverse effect. Anyway, this is what I have for you as of right now. I hope this kind of makes sense for you, but I'm here no matter what for you every single day. Please make sure to subscribe down below if you haven't done so yet. Share the video with your friends on my social media, and go back and check out any of the other thousands of videos here on the channel, including those you've seen popping up on your screen throughout this video, or those you see on your screen right now. Check those out as well. And until next time, enjoy your day. Check out the ones down below in the description or at the top of the comment section. And until next time, have a nice day. I'll catch you again later in the next video.